You're an economist for one of the biggest investment banks in the world. You're also a former Fed insider. What are you expecting when it comes to the hike, a pause, a pivot? Lay out your expectations.
Absolutely. I mean, it is our expectation that not only does the Fed hike today, but that it's the last hike in this hiking cycle. But boy, there are two things that are really important. One, huge amount of uncertainty about everything that's going on in the economy. And second, I don't think that there's unanimity within the Fed right now that this is the last rate hike, or at the very least, they can't be sure. So if you think about the fact that there's a meeting today, and then there's another meeting in June. Between now and June, we're going to get two more readings on payrolls in the economy. We're going to get two more readings on inflation. We think it's going to show that the economy continues to slow and that inflation is continuing to come off the boil. But you can't be sure. And I think the last thing that the Fed wants to do is to whipsaw people even further. And so we do think they will hike. We do think Powell leaves open the door for this to be the last hike of the hiking cycle. But I don't see a reason or even a possibility that he comes in and says, you know what, everybody, plant the flag. We are all done. This is it. It's going to still be what we call a hawkish pause.
All right, let's pull on this thread a little bit more, Seth. So a lot of anticipation for Jay Powell's news conference at 2:30 p.m. Eastern. You can watch it right here on CNBC. How much, not if he doesn't just spell out there might be a pause, how many hints are you expecting, if any? And then also, how does he address the regional banking crisis? I mean, I know you're not here to talk stocks, but looking at the KRE, down 1.5% right now, down 27% since Silicon Valley Bank exploded. How much does he talk about all that?
I don't think he'll be able to escape talking about the banking situation. We did have the big report that Michael Barr put out, very detailed, very much a mea culpa on the part of the institution, I would say. And there is the clear possibility that the developments in the banking system exert more of a drag on the economy than the Fed realizes, and so could be doing some of the slowing of the economy for them. On the other hand, inflation's still really, really high. And so what does he do? Well, the last statement that they put out, the last policy statement, said that additional increases may be necessary. And so in that sense, they've already left things a little bit vague. And then I think a lot of the questions coming from reporters in the press conference will be about how big a deal is the banking system? Are things getting better? Are they getting worse? We had the news of the sale of First Republic. And I think he's going to have to tread very, very cautiously, because there really is still a possible another shoe to drop there.
All right, so I think this is the question you're going to probably get a lot of calls on. When are you expecting a possible rate cut? We're seeing tightening credit conditions because of the banking crisis, the possibility of an economic slowdown, which should also lower inflation. When do you actually expect the Fed to say, you know what, we're going to cut these rates?
Well, I know you've talked to a lot of economists in your day, and so the answer clearly has to start with it depends. Our baseline view is not until next year, until call it March of next year, and that's under the view that the economy is slowing, that inflation is continuing to trend down, and they'll be able to hold things after this hike for the second half of this year and into the first quarter. Now, other things could happen, as we were just discussing, and if it gets to the point where the banking system is under more stress than we realize, you could see them maybe doing what they've called in the past a mid-cycle correction. So if you think to 1995, where the Fed cut 75 basis points, but then held rates steady for essentially another year after that, I think that's a viable scenario as well, where they make just a bit of an adjustment because they worry perhaps they had gone just a little bit too far. But baseline is not until Q1 of next year.